Welcome to WeLearn Virtual Learning Network. This is session number 1, Introduction to Compensation Benefits. Topics which we are going to cover in this session are Introduction, Significance of Employee Compensation, Elements of Compensation and Benefits, Objectives of Compensation and Benefits Plan, Characteristics of Compensation Programs. So coming towards the first topic, that is introduction about compensation. So let's know what compensation is. Compensation refers to all forms of financial returns and tangible services and benefits that employee of an organization receive as a part of employment relationship. The term compensation is used to mean employees' gross earning in the form of financial reward and benefits as part of employment relationship. Money is directly or indirectly related with fulfillment of all human needs, and the primary objective of anybody who takes up an employment is to earn money. Hence, the pay package or the compensation structure is the most important deciding factor for an employee to either accept or reject an employment offer. Human resource is one of the integral requirement of any business venture, without which it is impossible to carry out the day-to-day operations. Hence, employee compensation accounts for a large proportion of expenditure for any organization, and all organizations try to achieve an optimum employee compensation structure that is beneficial to both the employee and the organization. So now coming towards the significance of employee compensation. The following is the significance of employee compensation. Compensation is the basic component of an employment agreement which serves to attract qualified personnel to the organization. It helps to retain employees who are considered to be indispensable to the growth of the organization by providing attractive pay structure. This also reduces the additional turnover due to cross-incurred on selecting, recruiting, and training replacements. Compensation serves as incentive to motivate employees to put forth their best efforts. Now, let us analyze what are the elements of compensation and benefits. Compensation refers to money and money-related extras. Thus, in addition to a person's basic pay, compensation can include bonus, merit increase, variable pay, and long-term incentives. Benefits include the remaining things such as health care, pension plan, stock option, and legal service. An organization's compensation program sent a message to employee about its commitment to encouraging, recognizing, and rewarding employee performance. While money could certainly never be the only motivator, it is definitely important. The elements of compensation are: first one is the basic pay. Base pay is the fixed rate of compensation that an employer receives for performing the standard duties and assignments of a job. Employees need to ensure that base pay programs are designed to reveal market practice within their identified competitor group. To achieve this, organizations must first identify their competitive market. This can be achieved by considering different factors, including the nature of the industry, geographic location, total employment, and annual revenue. Next, they need to conduct an assessment of market pay practice for similar jobs within the recognized competitor group. This assessment should involve the duties, skills, and impact level of each job evaluated. that is, each job of similar size and scope. Next are the variable pay. Performance-based variable pay continues to achieve momentum as a more successful way to identify and reward employee performance. It is also known as pay per performance. Variable pay is popular in today's corporate world. By including a percentage of variable pay in the compensation plan, organizations ensure that two people with different efficiency levels do not get the same benefits. By doing this, the company reward productivity and hard work and motivate the underperformers to work hard. Once limited to senior management levels, these incentives or bonus plans are being redesigned to reward the achievement of specific company or employee performance objective. In a variable pay plan, the size of the award varies among employees and from one performance period to another based on level of achievement measured as well as against pre-established company and employee performance target. Amounts are usually calculated as a percentage of base pay depending on job category and position. Skills and competency based pay. Skill based pay offers employees extra compensation when they have new skills, especially recognized by the company as essential to achieve a competitive advantage. Skill based pay can be particularly useful for employees who like their current jobs but are looking for new challenges. Long term incentive compensation. Long term incentive compensation vehicles such as stock option plans and other deferred compensation plans, which are not usually used to reward performance, are achieving desirability among employees. These long term incentive compensation plans appreciate employee based on company's performance over a long term that is typically 3 to 5 years. Next are the elements of benefit. Company benefits can be include a wide range of offerings from standard medical insurance to more modern benefits like prepaid legal service. And applicants who are comparing job offers often narrow their choices down to those that offers the most generous benefit package. Applicants and new employees taking their choice of benefit plans often feel confused and overwhelmed as the terminology used can be difficult to recognize and understand. While the different plans are typically designed to deal with health and welfare of the employee population, understanding them can be a difficult task. Some of the benefits are as follows: training, healthcare, pension, and stock option. Next are the objective of the compensation and benefit plans. Objectives of the compensation plans. The objective of compensation can be classified under four broad categories: equity, efficiency, macroeconomic stability, and optimum allocation of labor. Equity. It is the first category which may take several forms. This concept involves income distribution through narrowing of inequalities, increasing the salary of the less paid employee, protecting real wage, and the concept of equal pay for equal worth. Efficiency. Efficiency is often closely related to equity because the two concepts are not opposing. The objective of efficiency are related in attempt to link part of wages to productivity or profit, group or individual performance, purchase and application of skills, and so on. Macroeconomic stability. Macroeconomic stability can be achieved through high employment levels and low inflation. Efficient allocation of labor. The well organized allocation of labor in the labor market means that employee will move to wherever they receive a net gain. Such movement can from one location to another or from one job to another. The condition or availability of financial incentives causes such movement. Objective of benefit plans. Employees and employer value benefit differently. They will hardly ever agree on the level of benefits that plans should provide. Employee try to find out employees' need and the cost of the organization. Employees wish to increase the value of benefit received and minimize other expenses. Employer objective. The employer objective for benefit plans are influenced by meeting the organization and compensation objectives, actual salary and percentage of payroll, administration complexity and cost, tax and accounting issues, the part benefits play in the total reward objective of the organization. Employee objective. Employee objective for benefit plans involve income protection for cash flow, income replacement, income for survival, dependence, adequate retirement income. Next are the characteristics of the compensation plan. The following characteristics are essential for every compensation program in order to attract, encourage, and retain qualified employees. These characteristics are the basis for an ideal pay structure. Internal equity. It is a measure of how an organization value each of its jobs in relation to one another. Internal equity exists when an employer pays wage corresponding with the relative internal value of each job. This is estimated according to the employer's view of importance of the work performed. Job evaluation methods are usually used to develop a hierarchy that reveals the relative value of the job on the basis of skill, effort, responsibility, and working conditions. A number of job evaluation approaches can be developed. Such approaches are whole job ranking, classification, point factor, factor comparison, slotting, scored question. External competitive. It is a measure of the organization pay structure compared to that of its opponents. External equity exists when employer pays a wage rate equal to the wage presenting an external labor. The following factors add to these wage differences among market are geographical location, industry sector, union sector, size of the organization, product competition, company prestige, education and experience level of available workforce, licensing of certified requirement called for by the job. Some combination of these factors verifies the labor market for the specific job. Employees should carefully define the attitude market to ensure accurate external wage comparison. Determining the market too narrowly can result in wages which are higher than necessary. Affordability. It is a measure of how high price a compensation program is to a company. If company structure are not formatted responsible, an organization should end up paying labor costs that exceed what it can afford to pay. Legal defensibility. Compensation programs should stick to specific ways designed to provide fairness of how employees are paid. Role description is a critical step in the development of legally justifiable testing mechanism. Next are the understandable or seeable. Compensation programs should be well communicated between the employees and the employers. Efficient to administration. When increased pressure to improve productivity and reduce cost, it is essential that an organization should complete It is essential that an organization compensation program can be as simple as easy as possible to maintain the management. Safeguard organizational resources. The compensation program should reward performance fairly without differing within the interest of company stakeholder. Flexible. Pay programs are necessary tools to fight for labor in the marketplace.